How do I pay myself from my sole proprietorship or single member LLC business? And then how do I or my business pay taxes on those earnings? These are two great questions I get asked all the time, both by new business owners and even some business owners that have been in the game for a little bit, who just either haven't taken the time to understand how it works or maybe just haven't had it explained very well to them in the past. So today, I want to take a look at and answer these two questions, starting off with how your business earnings are taxed, which will lead in nicely as to how you should pay yourself from your sole proprietorship or single member LLC business. If you are a sole proprietor, typically meaning you're operating your business under your personal name and your social security number, or you have a single member LLC, meaning you operate your business under its EIN number, you have no partners, and you have an elected S or C Corp status, then you are going to file your business earnings and deductions on Schedule C on your personal tax return. So it is not a separate filing from your personal 1040. So on this schedule, like I just mentioned before, you're going to put your year-end total business income and business expenses in order to determine your net profit for the year. And on that net profit, you personally, not the business, will pay taxes. To help visualize what I'm talking about, let's take a look at a Schedule C and fill in some of the pertinent details so you have a good idea of what it's going to look like come tax time. Here's the Schedule C in all of its glory. This is a 2-page form that is going to house all of your business information for the year, essentially. So as we can see right here is Schedule C of the Form 1040, meaning it goes on your personal tax return. Let's overview the landscape here. We have your name, which would be the name of either you or your spouse, is going to go up here. The business profession, if it's like construction industry or it's going to be consulting, something like that, that would go right here. You're going to have a code that relates to that business industry. You're then going to have the name of the business. If you have an LLC, it would go right here. If you do not, you would skip this line. It's not really necessary. You have the business address. You're going to be cash typically. You could be accrual if you needed to be. And then you have some other questions on like 1099s. Did you send those out? All right, let's get to the important stuff. Our income and our expenses. Part 1 is going to have our gross receipts or sales, line 1. What that means is all of the money you brought into the business goes right here. That gross revenue before any deductions goes up here in line 1. If you received all 1099s for your income, you're going to want to make sure that you put in all the 1099 income right here in line 1. Do understand an important note about 1099s. Let's say you received 5 1099s for $10,000 a piece. That is $50,000. If that is all of your earnings, you're going to want to make sure you put in all $50,000 of gross earnings for your business up here in line 1. If you had more income than the 1099s, that's fine. Put in more income. That's really not a problem. The only reason you should be waiting on 1099s is if you need to reconcile with what they say and what your books say, if you anticipate all of your earnings coming from a 1099, such as a payment processor like a 1099K from PayPal or Stripe or something like that. That would be the only reason why you should wait on that. Otherwise, you don't need to wait on 1099s from people because you're reporting your gross income from all sources regardless of 1099. If you have less than the 1099s reported to you, you are going to have a problem. The IRS will adjust your return and say you reported less than 1099s you received, and they're going to increase your income. So do make sure you at minimum put all of your 1099s on there. But if you know your income and it's well above the 1099s you're going to receive, ignore those and just move on with your life. So let's say for a business, we made $300,000 of gross total receipts, total income, total revenue is $300,000. And again, let's say we're in the construction industry. So we got cost of goods sold right here in line 4. Let's say we have $100,000 cost of goods sold, materials and supplies. So that's going to come down to gross income down here of $200,000. I know that there are, so we got gross profit here on line 5, so this would be $200,000 as well, right? And then you'd have like other income and things like that, such as like grants and federal and state gasoline and fuel tax credits, refunds, things like that. Those would go there. But let's say we got $200,000 of gross income, gross profit. So then below that are all of our expenses. Things like advertising. Let's say we got $5,000 in advertising. Let's say we got some car and truck. We'll take a look at the second page for that. We got some contract labor. Let's say we got $10,000 in contract labor. Let's say we got some insurance of $1,000. Let's say we got some legal professional fees of another $1,000. Let's say that we got some office expenses, $3,000. We got some travel of $5,000. We're looking at all these like, I don't really have any repairs and maintenance, taxes, license. I don't really have any of those things, or rent. I have some like dues and subscriptions. I got like phone bill. Well, where can I put those? There's no place. Wait a second. We got page 2. Gosh darn it. Looks like we got a place to put all of this. So let's say that we got dues and subscriptions. This is where we can put in those categories for expenses that aren't in those predetermined about 30 categories given to us. The IRS knows there are going to be those other expenses, so they provide lines for us to fill those in down here. If we need more space, we can add a statement to the return. So we got phone, so we got internet. Let's say this is another 1,000. This is 1,000. All right, so then our total other expenses is going to be $5,000. And then we're going to go back up here. So our other expenses, line 27, right? So those are going to go right here, $5,000. So then we got some other expenses. Let's go ahead and add in also our car and truck expenses right here by putting in our mileage. We're just going to take the mileage deduction. So let's say we got 10,000 business miles. We have 5,000 other commuting miles, whatever it might be. So we got 15,000 total. I mean, we use the car 2/3 of the time for business. This is where you put in, date you place it in service. Let's say it was 1/1/23. And, was your vehicle used for personal use and off-duty hours? Let's say, yeah, that's why I got those 5,000 miles a year. You're supposed to have another vehicle? Yeah, we sure do. Do you have evidence to support your deduction? Yeah, I have a mileage log, right? Of course we do. Is the evidence written? Should be. So we're going to answer yes is all there. So then I would have 10,000 times 65.5 cents per business mile for 2023 would give me $65.50 in a deduction for that. So now let's go ahead and add up all these expenses. We got ourselves 15, 16, 17, 20, 25, 30, 36, 50, 550, 36, 550 from our 200,000. We're going to have $163,450 right there of our tentative profit, right? So that is our profit before our home office deduction. Our home office deduction can be one of two things. It's either going to be $5 per square foot of our home office up to 300 square feet, called the Simplified method. In other words, up to a $1,500 deduction. Or we could take actual expenses times its proportional share of the home, right? So if we have 300 square feet of the home used for the home office and we have 3,000 square feet of a total home square footage, we'd have 10% business use of home. And I would take all my actual expenses for the home. If I'm paying rent, my rent expense for the year, my utilities, insurance, or if I own it, my mortgage interest, my taxes, and repairs, all that kind of stuff. Insurance, that times the percentage use of the home. And then also if I own the home, I'd have a little bit of depreciation as well on 10% of the depreciable basis of my home. So we're going to use the Simplified method because we're not looking at the form 8829, which is where those actual expenses would go. So right here is where we'd fill out the Simplified method, total square footage of our home. Again, we're just going to use that 3,000 square feet. And we have 300 square feet of used for the business. So I'm going to get a $1,500, a little extra deduction right here from the business, which gets me down to $161,950 of net profit. This is the number we have been looking for. This is the number on which we'll be taxed. And where this number will go is it's going to flow up to Schedule 1, can be added up with all your other income, and then eventually it's going to go up to here, to your 1040, right? This is your personal tax return. And it's going to go on to line 8 with all your other additional income from Schedule 1, line 10. It's going to go right here. So we got 161,950. That's where it goes. And so you will then pay taxes on this money personally. You're going to take all your other like standard deduction or itemized deduction. You're going to have a QBI deduction. All that's going to help you determine your taxable income and then on which you're going to figure out the tax that you owe. Obviously, with this, you're also going to have things such as self-employment tax. Again, another discussion for another day. But that is how you will pay taxes on the business earnings that you have made for the past year. It's all about total income less all of your expenses in order to determine your net profit. Net profit is what you're going to pay taxes on. So now that we figured out our net profit, you're probably wondering, okay, great. So how do I pay myself for my business? Because I'm going to owe a lot of taxes on this. How do I get paid from this? Do I need to set myself up on W-2? No, do not do that. On a Schedule C business, you are not supposed to put yourself on a W-2. All you need to do is take a distribution out from the business and pay it to yourself. It does not need to be anything complicated. It can be a transfer from your business account to your personal account. It can be a Venmo, Zelle, Cash App. It can be a check. It can be a withdrawal of cash. Whatever is most convenient for you. All you got to do is distribute the money out of the business account, put it in your personal account. That is how you pay yourself. It is truly that easy. And you'll notice that that's the only way that we could do something, because there's nowhere on here that says, where does it say anywhere on here that what did the business owner pay themselves? It doesn't say that. The reason is because this is only an income statement. That's all we have to report, our business earnings, less all of our deductions to result in our net profit or net income for the business. Not any information on the equity we have in the company or any loans we have in the company or the cash we have in the company. None of that gets reported on here because it's not pertinent to a Schedule C, Single Member LLC, or Sole Proprietorship business. Just to give you a little visual representation of what I'm talking about, let's say that in the year you started off with a beginning year balance in your bank account of $0. And then the only money that's ever come into this bank account is what the business earned. And we could see that the business technically brought in a net of $163,000 by the end of the year, right? So by the end of the year, it brought in $163,450. So in December 31st, that's what's in your bank account, right? If you drew nothing out, this is the amount of money that would be in your bank account if you drew none of that money out. If you drew none of the money out, you'd pay taxes on technically $161,950 because we took a home office deduction. If you took all of this out, put it into your personal bank account, you're going to pay taxes on $161,950. If you took 1/2 of this out, right? You just took out 1/2, you're going to pay taxes on $161,950. If I took 1/3 of this out, you're going to pay taxes on $161,950. It does not matter what you draw out of the business because your bank balance has nothing to do with the net profit of the company. All that matters is your total business earnings less your total business deductions that results in your net profit. And on that net profit, you personally will pay taxes. So, to sum up, how do you pay yourself from your sole proprietorship or single member LLC business? However is most convenient for you. Because regardless of what you personally draw out as the owner, this will have no effect on the net profit of the business, right? The business earnings less the business deductions. As you need to take a payment, take that payment. You're going to pay taxes all the same. Thanks so much for watching. And be sure to like, subscribe, comment, and hit that notification bell. And if you see any videos across TikTok or Instagram that you'd like me to comment on, just tag me on those platforms. I hope this video has been helpful, and I look forward to seeing you all in the next video.